Okay, today is February 20th, 2013. Let's take a look at Apple. Today the market really took a dive, and I think it's been quite a while that we saw a over 1% drop in the market. So everybody kind of getting a little bit hysterical and calling everything reversal. But to me, I don't believe this market have topped out yet, and this is just a little bit of an aberration. And maybe it's just a little test of willpower here to remind everybody that things could get ugly when it turns. But right now, I don't believe it has turned yet. But in regardless, let's take a look at Apple. Earlier on the previous video, I talked about on Apple. I talk about coming down to fill this particular gap here. Let me get that gap. This gap back here. This 425 for 70, no 448 or something. Let me see. Let me get that level here. This right here, yeah, the 443, 444, and this 425. So we essentially was talking about, this particular gap here that is going to get filled, and then we are also looking at some of the Fibonacci retracement level to make a case of what we believe that is a good possibility that it will come down and fill that gap based on this 127 using this particular pivot point, or if we use this pivot point, the 141 extension, that two, if we get it back up here, let me see, it's this particular 505 and essentially the 141 that gives us that 420. So it's within the vicinity of that 425, 444 gap level. And then also I did not have a position on at the time of the last video, but yesterday I did put on a position and bought some put. Today I got rid of all the put before the market closed, because if you look at it's essentially the reason why I closed it out is that 6 consecutive down day. Even though yesterday it was like a almost like a break-even day, it was neutral. But still, when you see a series of 4 or 5 consecutive down day, you look at the history of the price pattern or the price action from Apple. Here's a 4-day, and you see that then we get a little bounce here. Okay, and these are the 3 days, and let's see here. We got 3 days again. So a lot of them is 3-day, we get a bounce, 3-day, we get a bounce. Okay, here's the 4-day. Here's another 4-day here. Right. Okay. So not very often we see a 5 or 6-day without a bounce. So that's the reason why I'm kind of skeptical, and I would rather just take the position off and wait until tomorrow on the open, watch the market trade, see what the price action is. And if it wants for me to get back in, then I get back in. Otherwise, I just sit tight and wait for the next opportunity to see where Apple want to lead us, and then I will go in. So here's a 5-day, and then we get a little bounce here, and it's actually got a nice series of bounce, series of 3-day bounce here. So with that said, definitely the market is putting a lot of people on edge, and it should be. So I think it's kind of healthy for now, because a lot of them is, especially of some of the high beta stock, it's going to be running up at sort of like a parabolic form, and that is a indication of we are getting close to the top. But based on some of the indexes, and especially put out a video yesterday talking about the confirmation between the Dow Jones Transportation, the S&P 500, Russell 2000, and the Dow Jones Industrial, all confirming each other of all these new 52-week high and the all-time high from the Russell and the transportation. That tell me there is gonna be a higher high, at least one more high for the Dow Jones Industrial. Whether that's going to be confirmed by the transportation and the other indexes, that's we need to wait and see. But at least I do expect there's a new high for the Dow Jones Industrial to be to be had before this market top out. So good luck to everybody on the trading tomorrow.